we are going to get right into a conversation with Mr. Mudry today. Mike, how are you this afternoon?
I'm doing tremendous, Damian. How are you?
I am also tremendous, and I'm glad that you showed up
I'm
today.
glad you're tremendous.
So, Mike, today we are going to talk about first-time buyers / millennials and what's going on in that sub-market and kind of what the attitude is towards the real estate world from people who have not had houses before. There's a lot of changes going on, and things are different than they were back in our generation. Am I right?
Mm-hmm. Yes, sir.
So what's different? What's changing?
Well, we have a number of young people graduating college today with enormous amounts of student loan debt.
Student loan debt is something that it's always existed, but it certainly didn't exist back in our day in the way that it does today. Over $1 trillion, I think, is the big number for student loan debt.
Yeah, it's very significant. So, it's very important to, get with people and know this information from the very get-go to know exactly what loan program
right.
and what procedures we have to do to make sure they can qualify for a home. So we're seeing that a lot. We're seeing some wage stagnation when people come out of college. They're not moving into maybe their field of expertise from college right away.
Right, more the service industry.
Correct.
Making less money than maybe they would have had they gone into a specialty field, and coming out of school with student debt that was different than previous generations.
Yep,
so that's
right.
Two things.
And, still saving for a down payment is something that traditionally, historically, people would always do. And nowadays, with the mortgage programs available, you can still buy a home with very little down payment.
Right. You can buy a home for very little down payment, but you still have to have the income. And with stagnated
Correct.
wages, there's just a number of things. There's also just kind of a sociological aspect to it now, is that And Krista, who was our show producer for the Gerard Realty Show. Krista, say hi.
Hi.
So Krista is a millennial. She is a recent graduate. Now, I'm not talking last year, but I mean, Krista's, let's put you in the age bracket, 25 to 30?
That's right.
Okay. So Krista, like many people, is in her generation, is delaying the big marriage, delaying home ownership. Krista, how many of your contemporaries actually own or have purchased houses since you've been out of school? If you've got, I know you have lots of friends.
Oh yeah, tons.
So I'm just in general, the trend, are people in your age bracket, are they buying houses or delaying?
Delaying.
And
I probably have about 3 friends that have bought homes.
Only 3 out of probably a million that you've known over the years. Yeah. Yeah. And also, just as far as the whole marriage thing, getting, buying a house together, that's different than it was a while back. How many of your friends, that, have delayed that just in general, as far as not getting married until they're in that upper end of that 25 to 30 bracket?
Only one of my friends who has bought a house is married.
Really? Mm-hmm. So that's just different. I mean, Mike, when you and I were coming up, you are significantly older than me, of course.
Thank you. I just don't look it.
Yes, exactly. Yeah, you especially don't look like it on the radio. But when we were coming up, everybody got married, and we got out of school when we were 20 or 21. We got married when we were 24, 25, and we bought a house, and it was just kind of the natural flow of things. But I didn't have any student debt when I got out of college. I went to a UMSL here in town, and I worked 2 jobs all the way through school. So
right.
It's just a different thing altogether. And so, what are we talking about as far as the financial wherewithal and the mortgages available to people like our friend Krista?
Well, it's really good news because there's a multitude of mortgage programs where, again, you need very little down payment. If you think about it, we're rolling into tax season where a lot of people are going to be getting an income tax refund,
right.
hopefully.
Right.
And, that could very easily be enough money for a down payment.
And we talked last week about MHDC financing. Obviously, that's one of the major
tools.
Right. But that's not the only program available for first-time buyers. FHA still is only a 3% down payment. MHDC might be
3.5 on FHA. Mm-hmm. Sorry to be technical. But you're right. You can do a conventional loan with 3% down. Mm-hmm. And FHA, again, is only 3.5. And if you qualify for some of the first-time buyer programs, you'll need very, very little money to purchase that home.
Right.
And so what we definitely have to look at is explore any of those obstacles that could be a potential problem in whether you qualify or not. And that's where pulling a credit report, analyzing what student loan debt there might be or what any other installment debt, credit card debt.
And how does the student loan debt, I mean, a lot of people, I think the average is now coming out about $30,000. But, if you have a specialty sort of degree or, a medical degree, you get out of medical school, you owe $150,000. Obviously, you're better able to pay for that. But how does that student debt payment affect the qualifying for a mortgage?
Well, it can impact it significantly because traditionally those payments on student loans are somewhat low as a percentage.
Right.
But because of the dollar amount, it can really skew the ratios and keep somebody from qualifying for a home loan. So it can be. But the good news, again, is often student loans are deferred for a period of time. And if they are at least 12 months on an FHA loan, meaning that the individual doesn't have to make any payments for 12 months, so we wouldn't have to count that payment against them.
So how does that work? How does someone defer, someone in Krista's set, 25 to 30, how do they defer those students? Is that just an option they could do in order to buy a house? Is it a program, or how does that work?
No, it's pretty much a standard thing that whether it's Sallie Mae or whatever student loan agency it is, will allow an individual to do. They're typically deferred for 6 months after your graduation, and then you begin paying on them. But you can request deferment for another 12 or even longer. And if you need to do that to qualify for a home, you can certainly do that on an FHA loan.
So is that deferment, is that pretty much for the asking? I mean, anybody that, is going into a situation where they know they're going to have some fixed expenses for a new mortgage, and they just need to kind of get caught up for a year,
Correct,
right? So they're going to, is it just for asking that you can defer your student loan for up to 12 months?
The student loan agencies are very flexible with that. I have not seen one that was denied that I can ever recall.
Do you know the specifics? So, is the interest, obviously when you defer, you're going to skip your principal and your interest payments?
Yeah, it's typically going to be added on. I mean, it's not free money.
I got you. So it'll be added on. So maybe you're not going to shorten your loan by any stretch, but that 12 months, let's say, is going to be tacked onto the back end. Is your interest going to compound? Is it going to grow a little bit more because you're not paying that principal down?
Your balance is going to increase. By the amount. So you're deferring the payments. The money's not going away. It's still there adding to it. You're going to pay it all back. So
if someone's coming out of school and they've been, living in their parents' basement for a couple of years, or they have been living in an apartment and they want to buy a house, they want to get on with home ownership, which I think everybody really does believe and agree that it is the path to family wealth, is starting with the home.
I agree.
Right?
Yep.
So what they really need to do is to reach out and talk to a professional who understands how the student loan comes into the first-time buyer programs, into mortgages, and just understand what their options are. So what's the best way for someone to get around to getting that information?
Well, I would really like them to contact me at 314-503-6024 or text me at that number. And you could just...
But don't text if you're driving.
You always say that.
Well, we have to say that because
know.
It's a big deal.
You're looking out for people's safety.
Exactly.
And all you would have to do is just say first. Text first.
The word first.
The word
F-I-R-S-T.
first. 314-503-6024, and I'll give you all the information you need. One other piece of information that's important is these millennials we're talking about and first-time buyers in general, they've been renting for quite some time.
Right.
A mortgage is the only real tax deduction of any significance that we have today. That mortgage interest is very, very important. And with the affordability of housing today, with low interest rates, it's much better than renting.
Absolutely. And, you mentioned something earlier. A lot of folks may be waiting for that tax return to show up to get back here. And so one of the things that I think the first-time buyers need to really think about also, and this is something you can help them with, is, when they took the job, they filled out their forms to create the amount that's going to be deducted from their paycheck. So basically, they want to make sure they're going to get some money back and not have to pay.
Correct.
Those forms need to be refigured when they do take out a mortgage on a house, because the payment they've been making for rent is going to be treated very differently.
Correct. We always recommend that people would up their deductions with their employer on their W-4 form, and so have less income tax withheld.
Right.
So that just means that you get the money in your paycheck and you get to use it and invest it instead of leaving it with the IRS on an interest-free loan for a year.
So the message for our listeners is if you have not owned a house in the last 3 years, you are generally referred to as a first-time buyer.
Generally speaking, that is correct.
And if you would like to stop being a renter, if you'd like to build wealth through real estate, through your home, and have the option to do whatever it is you want to do with and in your home, call Mike Mudry at USA Mortgage.
314-503-6024.